effective energy transition. We got a star-studded panel to address this thing. Pierre Abadie of Tikehau Capital, Willem Huidekoper of IMAS Foundation, Salvador Vidal of Symbiotics Investments, Dolores Deroy of InvestNL, and Annemarie Schizzero of FSD Africa Investments. They'll be led by their moderator, Jesse de Klerk, partner at Stafford Capital. And they're sitting over there and they're coming on stage right now. Give them a hand. Well, pictures. Oh. Yes, there we are. What's this? Oh, shit. That's a joke, but they did it.
Well, very nice to be here. Thanks for having us. We have a great panel today. I think the topic does not need a lot of introduction. But to set the scene, in order to reach net zero targets, research shows that we need to invest an extreme amount of capital in energy transition. Estimates go about around 4 trillion a year, which is about double the size of what we invest currently. In other words, there's a massive gap that we need to bridge. Part of this capital is needed for funding new technologies, but the majority is needed to scale up existing technologies. We will talk about this topic in more detail during this panel. What I like about the panel is that, well, apart from the fact that they're all very experienced investment professionals, the group is also very diverse in terms of focus, asset classes, regional focus, stages of investments, type of investments, and also the origin of capital. In my view, a reflection of the fact that an effective energy transition requires a collective and global approach. And I think fully in line with the challenge that we're facing, we only have 40 minutes. So I will now introduce the panel. First of all, here on my left, we have Annemarie Schizzero. Annemarie is working for FSD Africa Investments, which is part of the FSD Africa group that was set up in the UK in 2012 as a development agency that specializes in deepening African financial markets, which we see as a key enabler of social and economic development. Our company partners with financial firms locally and intermediaries in building the conduits to get finance, especially private finance, to play a bigger role in financing Africa's climate agenda. So I think good coverage of emerging markets. Interesting to hear your views. Next to Annemarie is Dolores Deroy. She's working for InvestNL, the largest impact investor in the Netherlands, with an investment mandate of 2 billion euro, which is predominantly invested in venture capital. Mission of InvestNL is to accelerate the most important transitions within the Netherlands to make the country more innovative and sustainable. Dolores leads the blended finance advisory team at InvestNL. Next to Dolores is Pierre Abadie. Pierre Abadie is the Group Climate Director of Tikehau Capital, which is a global alternative asset management group with more than 40 billion of assets under management. Invested across a range of asset classes, but also 12 billion dedicated to impact and sustainability, ranging from decarbonization, nature and biodiversity, resilience, and sustainable cities. Next to Pierre is Salvador Vidal. Salvador Vidal works at Symbiotics Investments, is a leading market access platform for impact investing in emerging markets through private debt. Salvador has 20 years of experience and is leading the investor relations division, or 25 years, I should say, of experience, is leading the investor relations division. And finally, we have Willem Huidekoper of IMAS, and IMAS Foundation is a sister foundation to the INGKA Foundation. the owner of INGKA Group, who owns and operates the majority of IKEA stores globally. The foundation invests with the purpose of creating long-term returns on financial assets, incorporating responsibility and sustainability considerations into all investment decisions, and has about 13 billion of assets under management. And Willem is the head of sustainability and non-listed equities at the foundation. Welcome. We still have some time left to go over some questions. Maybe the first question to set the scene. Which areas of investment are most crucial in order to achieve net zero goals? And I think put it in perspective of your own experience and focus. Maybe Pierre, you want to start?
Yes, for sure. So you've mentioned it. In fact, we have been investing last year 1.8 trillion euro into the decarbonization. So you know the name of the panel is the energy transition, but I find it a bit restrictive because the energy transition is really focused on the energy production system, when the decarbonization of our economy is a mix between the end-use shift and the way that we are producing energy. Just to give you a reference, 1.8 trillion euro is twice as big as the fossil fuel market. Right? So there is usually a misconception by the market believing that this is narrow, this is new, this is climate tech, this is something that needs to be scaled up. The reality is that the market is already twice as big as the fossil fuel market. 6 years ago, when we launched our first decarbonization fund, this market was 1 trillion, so as big as the fossil fuel market. And if you look at the projection of the International Energy Agency, by 2030, so we're talking about the next 2,000 days, and it's not something that is 2050 or very far. Just if you look at the policy already in place, this should be 2.4 trillion, right? So we are on something that is already twice as big as the fossil fuel market. We are on something that is about to continue to grow. In the meantime, the fossil fuel investment will drop because geologically there is less and less, and we are electrifying the world. And therefore, today, for each euro invested in fossil fuel, we invest 2 in the decarbonization. By 2030, depending on the scenario, the policy in place is 5 times more. The net zero scenario is 10 times more. This is what we're talking about. So we're talking about something that is like already 3% of the global GDP. Then, I would like to break another misconception. Climate tech in this is a very small portion of it. The investment in climate tech last year were 32 billion. So it's 2% of the topic. So when we talk about what is the decarbonization, it's mostly boring stuff. We are talking about, changing an internal combustion engine by electric engine. We are talking about changing boilers that are using fossil fuel by heat pump. We are talking about the people that are installing it. We are talking about the people that are manufacturing it. We are talking about the people that are engineering it. And we are talking mostly about a market that is Europe and US, because this is where the emissions are currently being made. So it's not a topic, the decarbonization, the emergency of the decarbonization is not a topic of emerging. It's a topic of advanced economy. This is something that is explained by the International Energy at length. So this is the main areas, and when we talk about the focus point is electrifying the end use, then you have to look at the pain point. So the pain points start to be the grid right now, because we have made some electrification the last 5 years. We start to have quite a lot of assets that are using it. We start to have quite a lot of assets that are producing electricity as well. And in the middle, the grid was not invested in. So you need to have a large investment, and I would say that the main hurdle is there. And then we're talking about passive efficiency. So passive efficiency is mostly for our developed economy, renovating buildings. So again, very boring stuff. Changing the doors, changing the windows, putting the heat pump, putting insulation, etc. It requires a lot of local workforce to do it. And then you've got the low carbon source of energy or input, basically using more recycled material and using, I would say, the part of the energy transition, which is the renewable. But again, the renewable in the whole power energy stack is still very small. We are currently at 80% of our energy coming from fossil fuel. Even the net zero scenario by 2050, you've got something that is 30%. So it's not because we say net zero that it do not exist. The net zero means that we are able to capture as much CO2 as the remainder of our economy emits. Yep. Okay? So this is the transition that we are talking about. It's a transition that is, for me, as big as the industrial revolution, but at the pace of the digital revolution. This is what we're talking about. So the main issue for me is the pace. We need to go 10 times faster than the Industrial Revolution.
Thank you. And Annemarie, I think energy transition is always, or most cases, associated with change in developed markets. What is your view within, well, your region, emerging markets?
Thank you. Thank you very much. So I'm going to really speak for the African continent. And just, you know, I know we think of the African continent as an emerging market, lots of issues, lots of risks, but let's take a moment just to look at the potential and the opportunity, particularly for financing flows. So Africa can be a vital solution to the globe's climate problem. We have 40% of all of the world's renewable energy resources, and the renewable energy generation potential could outstrip demand by 19 times by 2050. So we're talking about solar, we have a lot of sun, we're talking about wind power, we're talking about hydropower, we're talking about tidal power, we have vast coastlines of ocean. In addition to that, we possess about 20% of, 65% of the world's arable forest, of which the Congo Basin represents about 20% of the globe's arable forest. So just that potential in terms of CO2 emissions. The second point I want to make is that we don't have the challenges of a transition per se. So there is this huge opportunity for the continent to leapfrog a fossil fuel era for industrial growth. Yes, fossil fuels will still continue to play a role, but we have this huge potential to leapfrog that. The third point I want to make is we are at the tipping point of many of the business solutions to capture this energy. So whether you're talking about biomass, whether you're talking about cook stoves, mini grids, solar panels. I live in South Africa. We have a huge problem with electricity. We have something called load shedding, which means that there's no electricity in certain hours during the day. But the private sector has kicked in to come up with the solutions around solar panels, but also the financing solutions to enable households and businesses to actually acquire those solar panels. So we are at a tipping point of change and that leapfrog. And then the third point I want to make is that the African stakeholders, whether it's the policymakers, the financial institutions, the institutional capital, the pension funds, the banks, the fund managers, are all rallying around how do we capture this opportunity. This is part of our economic growth story, and we need to figure out how to finance those solutions. So you have organizations such as the African Natural Capital Alliance that's not only looking at how to disclose the impact of their financing on nature, but how to actually invest in nature. You've got the Pan-African Association of Fund Managers. We have a small sort of capital allocation for fund managers. Our assets under management are 2 trillion. It's a lot to us, probably very little for you. But the point is here that our population is young. By 2050, we'll be about 2.2 billion. That means that those assets under management are going to continue to grow. So how do we harness that capital in order to drive growth around the natural resources, the energy solutions that we have? So there's huge potential on the market.
Yeah. Thank you. And Dolores, interestingly today, 5 biggest pension funds in the Netherlands announced that they are willing to put more capital into energy transition. InvestNL plays or could play an important role in that. How do you see the opportunity in the Dutch market?
Yeah, maybe to check how familiar is everyone with InvestNL. InvestNL is the National Promotional Institute of the Netherlands, so it's comparable to KfW, for instance. And we really have a role between the private and the public sector. So InvestNL can then for their National Promotional Institute mandate, have a very broad set of products that could be deployed for the energy transition. So currently we focus mostly on venture capital, but we're already in the business development side. We're focusing a lot of the products that are still needed, specifically within the Netherlands, because it's not called InvestNL for no reason. But yeah, it could be quite broad with what we could offer over the longer term. And I think one of the main questions here, what are the key investment areas? What are the critical investment areas for the Netherlands? I thought it could be fun now to state a few facts on where we stand and then how far do we still need to go. So the first one is on electricity. One of the nice things that I can state, because the other ones are a little bit more detrimental in terms of where we stand, is that with electricity currently we have 50% of renewable electricity. So that's a top number that has been achieved so far. So that's quite positive. In 2030 it's supposed to be 70%. So that's looking quite decent. And as you mentioned as well, that is a technique that's in existence, so it's more just ramping it up and continuing that investment. So it's still required as a crucial investment area, but it's looking okay. The one thing that is in that sector looking a little bit more problematic is the ramping up of the capacity within the Netherlands. So in the Netherlands we have quite long waiting lists to get connected to the grid. So sometimes that could be even 9 to 10 years. One of the articles that was published today by Rubio Investments, so you can look that up maybe later, was that one of the key investment areas, which you might not think about right away, is in labor, to really school people that are required to execute whatever is needed in this sector. So that's on electricity. Where we stand on hydrogen, the target for 2030 is 4 gigawatts for the Netherlands. Currently, we have 200 megawatt project being executed of a total of 1 gigawatt projects that got a subsidy from I think it's pronounced IPCEI or IPCEI. I'm not sure if you're familiar because it's all European. But yeah, that still, it needs quite a lot of investments. And the last one that I want to mention is the heat sector. So in Holland, we're very reliant on gas, natural gas, as most of you know. And there we have a target to get to 1.5 million houses on heat networks for, I think, 2030 as well. And we're now at 600,000. And the investment there are really slacking still. So that's another investment area where we still need to find a solution. And from InvestNL, we're also focusing on those areas specifically to be let's say, the connector between the public and private sector to come up with the right structures with the blended finance team to move that forward.
Yeah, thank you. And when we talk about realizing climate goals, we often talk about energy transition and using other sources. Maybe Willem, for you, how important is, let's say, changing behavior and using less compared to using green alternatives? What is your view on that?
Yeah, initially, or at least a couple of years ago, I was always a believer that we need the technology to drive this, and you need green technology to drive this whole transition. But if you look at things, and also I think I read a study on, that was looking at the UK plans to become net zero. And I think they concluded that 60%, of a bit more than 60%, you need some sort of a behavioral change. And a lot is enabled to technology, obviously, but there's a large factor of behavioral change. And I can relate to it, because we need to change the way we do things. And this overconsumption kind of economy we live in, I would say the fashion industry is the most pressing. I would say we need to combat that, and we need to go back to that you have, that you maybe not wear your t-shirt one time and throw it away. And it's also what I see with Apple having a really good target of making their products climate neutral by 2030. So that is a really good achievement, and I think they're on the forefront. But still the best solution is just buy a refurbished phone. And why are they designing products that deplete the batteries after 2 years, and so that you're forced to buy a new one? So I think yes, we need behavioral change, we need to consume less, and I think it's good in Europe that they look at the right to repair as one of the fundamental things, that we just go back to having a sewing machine and maybe repair our own clothes and buy a refurbished phone, or just with these kind of things. That is a good thing, but you need stimulus on that part. And also there are some technologies to support it as well. But yes, we need more behavioral change.
Yeah. And Salvador, what is your view?
Well, if you ask, and I'm going to propose a counterpoint to what you just said, which I think is super valid, but unfortunately not really for the emerging market world, where 6 billion people live. When you put the question like that, it looks like you have an option. It's either one or the other. Well, for those 6 billion people, there's one thing that they have in common, everywhere in the world, is that they're growing in everything. Take every indicator, they're growing. Population, every indicator, economic indicator you can find, they're growing. So if the option for them is, do they need to change behavior and do less? Come on, it's not viable. And Anne-Marie, you said it before. In most of the countries, in most of those countries in the emerging market world, what they need is not for a change in behavior. What they need is massive investment so they can leapfrog. Or I don't know what animal jumps further than a frog? Kangaroo, maybe? So it's a kangaroo leap that they need. They need investment for that. So we don't see it as an option. It's not an option. It's a variety of solutions that you can have, and we must be able, as investors, to really have the flexibility to understand that it's not one size fits all, and that probably we need to do both. It's not optional.
Thank you. And talking about challenges, if you have to mention one key challenge, and obviously there are many challenges, what would that be, Salvador?
Let me continue on the emerging markets, and especially if we're here in Amsterdam and most of the investors are here around, and probably one big challenge that we have is to generate trust. I mean, it's complicated enough to invest. Try to convince people to invest in Nigeria, for example. And you have tons of valid, options and valid reasons not to do it. Political instability, everything. Let me take an example, Ecuador. Ecuador is very politically unstable now, and we have been invested there, and probably it's not a good idea to invest now. But what do we do with the investment that are currently going in Ecuador? Well, good news. Companies are still there, the clients are still there, the people still have the same needs than 3 months ago, still happening. So there's a way to generate trust if you go back to the basics of the economy. So political instability is not a reason not to do something. It's a reason to be cautious. It's a reason to adjust your risk return pattern. It's not a reason for inaction. Just another example. You know which scene in the world is one of the most vibrant fintech scene? You find it in Kenya. Not in London, not in Paris, not in the Silicon Valley. I mean, those three, of course. In Kenya. Do you want to cut yourself from that by not looking at emerging markets investments? That's the question.
Yeah. Anne-Marie?
Yeah, just to add on to that, I mean, I don't think there's just one challenge. There are multiple challenges. And I think one of them is, in a way, to do with the mismatch of the financing that's available with the stage of the project development. And added to that is the fact that our financial markets, our financial systems are not as deep as they are in Europe. And so trying to figure out how to get capital markets to come up with the right solutions to finance the climate infrastructure or the energy infrastructure, or how do you get more venture finance to finance that startup space where you have a lot of the innovation and the leapfrogging happening. So, and then third to that is the fact that our markets are fragmented. We're not one continent. Yes, we might be 2.2 billion people by 2050, but we're not one country, one continent. And so you have to deal with that fragmentation. And so part of the solutions are going to be strengthening financial markets, strengthening local currency finance, trying to issue more green bonds, trying to promote and encourage an ecosystem for venture finance, trying to figure out how do you do project development finance, blending capital. So again, coming back to what I've heard in this conference, partnerships are just going to be very important, but partnerships between the different types of capital allocators. So our own asset managers, with European asset managers, with the DFIs, with the philanthropists, and really coming up with innovative capital market solutions could help address these problems.
Yeah. And Dolores, from a Netherlands perspective?
Yeah, I think maybe an example might be the most illustrative. So if I just mentioned the production side of hydrogen, but you also have the import case. One thing we're looking at with InvestNL is this case where we look at the food chain. And I was just discussing with one of your teammates actually that it's very important to bring people from the production side, but also on the offtake side, more together. So here we are seeing how can we look at the contract that's underlying that could decrease the price or other variables in a way that can reduce the financing gap that currently exists for that specific case. Really grouping the offtake together and finding each other on that side, which enables the financing gap to be closed. And I think that's one of the key things that we're working on now, is to find those structures that can then be the solution for those problem cases.
Thank you. I think earlier in the morning was an interesting discussion about potential negative externalities. How do you take into consideration, Willem, potential negative side effects of the climate transition or an investment?
Yeah, I think what we've learned, and I think it's a good one, that everything has negative externalities. And wind parks, solar parks, everything has it. So yes, that's a good starting point in looking at that kind of things. And so I think you really need to focus on what are the most pressing issues here in solar parks. You need to look at the sourcing and where are the solar panels made. So I think you need to map for yourself what are the potential big outcomes, and that needs to be a positive thing, obviously. But depending on, I would say, the investment, the project, the country, wherever it is, you need to, I think, identify what's the most relevant externality in that and trying to map that. And I think it's looking at, we also invested in a battery manufacturer. Electrification needs batteries, and we all know where batteries are made from. And that is a problem. You need those kind of rare earth metals. And it's a problem because cobalt comes predominantly from areas where there is also child labor involved. So what we ask those kind of manufacturers, where does it come from? Be transparent. Try to, and to your point, work together, because it's a whole supply chain you need to improve. It's naive to think we invest in a project or company and we just say you can't do this and this and this and this and expect they'll live up to it, because it's really difficult on these kind of things. So we expect that those people work together, try to get a more transparent supply chain and improve it. And with that, you need to work together. And then you'll come to a better solution than, I would say, the standard one. So, but it's not an easy one, and I think there's definitely some where you could end up with some things that are controversial.
Yeah. Well, it's clear that the need for capital is high, but are there sufficient high-quality managers, funds, or investment opportunities to invest in? Pierre, maybe a question for you.
Say yes. Say yes.
Only one.
No, definitely not. No, I think that somewhat you need to change the system of how the investments are made. As we discussed since the beginning, ultimately we are talking about systemic change. And the last 30 years, it was all about financial engineering. To make it simple, the world of finance on the alternative was mostly made of large cap buyout, where you take debt at 0% and you reduce cost, you deleverage a company, and then you say I'm a generalistic buyout fund, so you are making a spreadsheet Excel and you're trying to minimize the cost of financing and extract the cash from it. Here we talk about a value chain change. Just to come back on the 2 points of Dolores and Willem, you talk about the electricity system. Well, if you want to fulfill the electricity need aligned with the net zero, you need to double the electricity consumption in Europe by 2030, the next 2,000 days, which means that, well, you need to install a lot of power cables, the same in the US, etc. It's mostly a topic of Europe and US. If you then look at the physical number, because here we're talking about euro, etc., but at the concept of human euro, the physical number, you are talking about adding 30 million kilometers of power cables. So it's the distance between Earth and Mars. This is what we're talking about. So even if you go to see Elon Musk today and say, well, please stick power cables to your rocket and let's go to Mars, you are not there in 2030, right? So that means that every 5 days, you need to make the round of the Earth with a power cable. I will give you another data point. Right now, we are doing it every 15 days, okay? So then you understand that there are currently millions of people that are currently installing power cables in Europe and in the US. So what's the main hurdle of putting 3 times more power cables? It's not the amount of money. It's not the amount of ambition. It's not the policy in place. It's not the politics. It's the number of workers. If you want to put 3 times more power cables, you need 3 times more workers. But you are talking about advanced economy, where we said to our youth that they need to go to study generative AI to make some blockchain, looking at having cryptocurrency that leads to have NFT, and with that we can tokenize the carbon credit because we have planted the tree somewhere. Well, no, you need to put and lay down power cables. So the main hurdle is the workforce. You need to triple the millions of people to do it. Once you've done that, well, imagine that we do it. That means that we need to have access to critical minerals. Well, currently, 50% of all the copper is used to make power cables. If you want to triple the amount of power cables, you need to triple this amount. So which means that instantaneously, you need to have 1.5 times the current production, plus the 0.5 that was there for other use. So tripling the power cables on advanced economy means doubling the copper production right now. And we are talking about the next 2,000 days. So I will crack the news, we are not going to make it. Not because of the lack of ambition, not because of the lack of policy, not because of the lack of money, because of the lack of workforce and the access to critical minerals that are required to do it. We are going to enter into a lagging time of 20 years, perhaps. So yes, we lack investment companies that understand that. It's not a topic of money, it's not a topic of concept, it's a topic of full value chain, real economy, and having everyone aligned to make those transformative change.
Yeah. Thank you. I see we're running out of time. Do we have time for one or more or 2 questions from the audience? If there are questions.
Yes, hello. My name is Kim Tin Chong Chin Yu. I work for Net Lloyd Pension Fund. I'm a bit curious about what Willem said, because we need to change our behavior, because the other things are, let's say, very logical from a standpoint, from an investor point. You have to invest money, look at the opportunities. But I'm just curious to understand how you want to change people's behavior, because people will basically buy the cheapest products. And if you don't have a financial incentive, how are you going to stimulate them to limit their consumption behavior?
Difficult one, but good question. No, I think what I said about stimulus, in a way, had the right to repair. That's one thing, that you force manufacturers to build a product that is better. I think we have the capabilities, the capacities to build iPhones probably that could have a useful life of more than the 2 years than you have now. So I think it starts with the right stimulus, or at least to have regulations in place to force manufacturing doing it. And like this example, then manufacturers probably will look to improve their product. And in there's a better incentives also for people to consider that and say, hey, I can repair my product easily and I have a good product. And it's not that my software doesn't run anymore because my product is now 2 or 3 years old, because that's the problem. And they're designed in doing that. And that's the perverse incentive with a lot of these manufacturers. So that needs to be solved with that. And I think what I also believe is that there's a lot of people saying that the individual action doesn't matter. We need to solve things at the higher level. But there are definitely people out there, and I also believe in that people around you look at the things you're doing. So if you're convinced of a certain topic, and you say, well, I'll do this because I stand from this. And then people say, hey, that's a good argument. And with that, you get a ripple effect. So there's a lot of studies that definitely believe in that. So there is, I think we all should be aware of that our actions matters. And as long as people just saying it aloud, our actions matters. And the things I stand for, I try to convince people, but not in a bad way. You can't eat meat anymore or something like that. But just saying I do this because I feel better, and I try to lower my own footprint and try to set an example, and then people pick up. Say maybe, hey, that's a good thing. And if we all do these kind of things, then it ripples over. But it's difficult because I fundamentally believe it doesn't work if you're saying you can't eat meat anymore, if you can't do this anymore. People will turn away and say, I had that. There was an example, I think there was a no meat week this week in the Netherlands, or the week before, and people getting really aggressive with that. And it's not even saying you can't eat meat this week, but it's just trying to change behavior, and people get aggressive about it. So that doesn't work. But yeah, setting examples for your circle, and then it will ripple, hopefully.
I would just add something very reassuring as well, is that, if you look at the system itself right now, when you look at the amount of energy that we extract and the one that is effectively used, we are only using 20% of it because our system is highly inefficient. Most of it is wasted. If you look at the overall system, so our system is basically an extractive system that is taking natural resources and using ecosystemic service to produce stuff that we like to consume. And basically the output of this system is what we call well-being in the form of wealth, GDP, and waste. This is basically what our system is making. Natural resources transform into waste and euro. When you look at this system and you look from a natural resources perspective, we are using 100 gigaton of natural resources per year. When you look at effectively what is used in our economy, it's 30 gigaton. The rest is emitted in the form of CO2 mostly. It's dispersed, so that means that there is like 20 gigaton. We don't even know where it is. It's somewhere. And then the rest, it's crazy, and then the rest is wasted. And out of this waste, we burn it, or we landfill it, or we put it into the sea. Only 8% of it is recycled. So what I've just said is just scary, because after 200 years of industrial revolution, we end up into a system that is mostly producing 80% of waste and 20% of the real economy. But what I'm saying is also very interesting, because if we manage to optimize the system in another way, if all the behavior, we start to praise the fact that something that was made of recycled product, we can multiply by 5 the size of the economy with the same amount of natural resources that we use. And we don't want to do that because we are using far too much natural resources. We should be, in fact, reducing it certainly by half to come back into the planetary boundaries. But that still means that by reducing by half the natural resources that we use, we can perhaps multiply by 2 or 3 the current economy if we are 100% efficient. Think about a system that is 100% efficient. It's nature. Nature is basically capturing energy from the sun through a plant to produce life on Earth and is wasting zero. The only system that produces waste on Earth is us, right? Nature is not producing anything. Why? Because it's very complex to capture through a plant energy to produce life. It's 1% efficiency. So since it's very complex, they praise this complexity and they manage to produce zero waste. We've done totally the opposite. We took easy energy that we waste to extract stuff, to make stuff that we don't need, to produce mostly waste. So by changing our behavior and perhaps moving forward about just consuming stuff to throw it, we can still grow largely, certainly have most well-being while reducing the amount of natural resources that we use.
Thank you, Pierre.
Maybe add one thing. Because, yeah, I do think it's quite important because you talked about behavior. And in the end, what you're saying is very rational. But I think I've read this book, which is called Lead for Climate, Climate Change. And it's from a PhD person in psychology. And one of the key things that she mentioned is that you have two ways of thinking. On the one hand, it's that super rational thing of this is what we need to do, this is efficient and makes the most sense. But on the other hand, we have this impulse way of thinking that also can take over your brain. And I think it's very much important for all of us to become aware of those two ways of thinking and talking to one another. That can also lead to a different conversation on these topics and then on behavior. That can lead to a change on behavioral aspects as well. So to take that in mind, that it's not all rational. That you need to see what is urgent for that person, how can I make it make sense for that person on a more emotional level than on an intelligence level.
Thank you, Dolores. Well, time's up. So thank you. I would like to thank my fellow panelists for this interesting discussion.
Very well. Yeah.